Warren Buffett's interpretation of financial reports. Number 52. Capital expenditure. Having none is the secret to getting rich. Recorded on the cash flow statement under investment operations. These are outlays of cash or assets more permanent in nature, such as property, plant, equipment and patents. Not all companies are created equal. Some make huge capital expenditure to stay in business. This has a deep impact on their business. A DCA company uses a smaller portion of earnings for capital expenditure. To see capital expenditure to net earnings, add total capital expenditure for a 10-year period. Then compare the total earnings for the same 10-year period. This will tell you what is going on with the business. If it is consistently using less than 25% of net earnings for capital expenditure, more than likely the company is a DCA business. Another business tip from Learn Accounting Fast. Next, stock buybacks. A tax-free way to increase shareholders' wealth.